Bitcoin Improvement Proposal 119 continues to stir debate in the Bitcoin community. Developer Jeremy Rubin proposed the soft fork to enable covenants on Bitcoin, which would allow BTC transactions to specify limitations or restrictions on transactions. Adding fire to this proposal, Rubin is requesting speedy trial, that is, requesting miners to signal their support or not of the proposal to expedite its implementation. Joining us now to discuss is Adam Back, renowned cryptographer, inventor of Hashcash, and CEO of Bitcoin-focused tech firm Blockstream. Hi, Adam. Thanks for joining us.
Hi, thanks for having me on.
So there's two debates here, really. First, whether BIP119 is needed, and second, how it should be implemented. Where do you stand on the first point? And perhaps you could help folks, in terms of just walking us through what it is.
Yeah, I mean, I think there are basically 3 or 4 different topics that kind of got confused because there are very technical parts and then more, use case parts. And so backing up, the top level discussion is a kind of covenant type of opcode for Bitcoin. So Bitcoin's programming language is based on opcodes. It has dozens and dozens of opcodes, and a covenant is a particular type of opcode that was first proposed in 2013. And at this point, there are maybe 4 or 5 different proposals. 119 is one of them. CSFS, TLUV, and there are a few more. So alongside with CTV. So, one of the discussions is, are covenants desirable for Bitcoin? And I think at this point, for the last few years, people have been mulling it over, considering the risks and trade-offs and thinking, yeah, well, let's see some more R&D on that. And then
maybe you
CTV
can go
is
through some of what are the benefits and what are the pros, and then what are the cons? How can it go wrong?
Right. So the benefit is it's a bit more flexible opcode that enables some new types of scripts. One of the primary use cases is a thing called a vault. So kind of like a time lock vault with a bank, that you would have a time period where you could start taking some Bitcoins out of a vault. This is for people who do long-term storage. And you'd be able to cancel a transaction, let's say for a period of a week or something like that. And then finally it would become available to use. So that's one of the types of use case that this type of programming would allow. And there are a few different variants. Broadly, there are recursive and non-recursive. Back in 2013, there were considered to be some risks with recursive. I think these days people have become more relaxed about those risks. They are kind of opt-in. They don't affect you unless you use them. So there's a bit of discussion about whether Bitcoin should go, explore going directly to recursive or stick with the simplified. And CTV is an example of a simplified one. TX hash is another simplified one. And there are recursive variants under discussion as well.
And where do you stand?
I'm pretty easygoing in terms of whatever the technical community arrives at consensus on. So the technical consensus discussion is all the technical people who have experience with that kind of tech get together and compare trade-offs between different variants, hopefully eventually arrive at a conclusion about which way of doing it is better or best to do first. And there are lots of trade-offs to discuss. And at that point, there would normally be a discussion about activation afterwards.
Well, from what I understand, these covenants would almost give Bitcoin some smart contract capability, but it could also go wrong in the sense that if a government actor were to enter the picture, they could prescribe some regulatory authority over Bitcoin, which is not what the Bitcoin community wants. So it could go wrong in that sense. Is that the case?
That was one of the original concerns back in 2013, but I think that effectively there are simpler ways to do that, which already exist, in fact, and are used for share-like transactions. So things where there are transfer restrictions to do with which country the resident lives in, things like that. And so, I think from that point of view, it doesn't really introduce new risks. So people got more relaxed to that, but they are quite complex new features, particularly the recursive version. So it's certainly something you'd want to see a lot of, design thinking and security review about the implications and the way it interacts with the other parts of the Bitcoin script system.
So that's what I hear very often. There should be more review, there should be more design thinking. And I guess that brings us to the second part of the debate, which is Jeremy Rubin has suggested that this proposal be implemented via Speedy Trial, which would have all miners signal whether or not they support it or not. And in your view, I believe you believe that it is just too quick, correct?
Well, I mean, I think the usual process, kind of jumping the gun, if you like, so the usual process is that, and this has happened, many times in the past with Bitcoin upgrades over the years, there would be technical consensus and community consensus, the ecosystem, the companies, the wallets, and so forth, and the users, the investors, that they want this feature, that they agree this is a good way to do it, and then they discuss activating it. So I think there was a bit of confusion early on that CTV kind of proposed to activate like pretty immediately and find out if miners like it, which kind of misses the point. And that seems to be retracted, which I think is the right thing. So now it's, there are multiple different ways to activate things. Previously, BIP119 has been used. Speedy Trial was used for Taproot. And something else entirely was used with SegWit eventually. And so, I think it's just very premature. So I expect we'll see a lot more discussion about the trade-offs and see how that progresses.
Do you have a sense of whether miners have signaled their support for it and what the consensus is in the community?
I mean, I think at the abstract level, at least the developers are quite interested to see covenants further developed, potentially eventually get adopted. I think it's very premature, so the miners don't really play a strong part in figuring that out, whether the ecosystem wants it. I think that's one of the things the market learned from the kind of block size drama back in 2015, which is that miners are just kind of service providers that act on what the market wants.
Well then, Adam, what would you say to young developers like Jeremy Rubin who just really want to get this done and really want to see it upgrade to Bitcoin and are trying to push this proposals like this through? What would you say to those young, ambitious developers?
Sure. I mean, there have been a lot of new people contributing to Bitcoin. Each release has typically got 100 to 200 contributors. Many of them new who weren't participating a few years ago. So that's great. And I think there are general upgrades to Bitcoin, and there are ones that touch the consensus rules. So the consensus rules tend to be higher risk, higher review, and Bitcoin uses something called the technical consensus process. So it's a bit like the IETF process. A side effect of it is that it tends to be a little slow because you're essentially looking for approximately everybody to agree, or at least agree that any of the technical concerns raised are addressed. And so, I think you just have to go through that process, basically involve more people. I mean, the first step towards consensus to get one other person to agree this is a good idea, and then, build from there, have trade-off discussions. I think a good way to build consensus is to discuss the trade-offs between different versions.
I guess that's the consequence of being truly decentralized. Just one quick question before we end off, Adam. But, the big story of the day is UST, an algorithmic stablecoin from the Terra Luna community, has lost its peg. The UST has now gone down to 92 cents, now at 94 cents. They have huge Bitcoin reserves, the second largest corporate holder of Bitcoin. And I wonder, what do you think is the consequence of this to Bitcoin potentially, if any?
Yeah, well, I'm glad you asked that question because I was kind of disagreeing with what the previous presenter was talking about. I mean, previous speaker was talking about. So basically, it's specific to this stablecoin because it's fractional in two ways. So one is it's partly backed by these Luna tokens that they've just printed, as part of a kind of ICO-like process. So their value is, anywhere from what the market will pay and zero. And more recently, they've added Bitcoin collateral, and they had some dollars originally that they, bought Bitcoin with as well. And so, it was observed that the whole thing was fractional. It's kind of like a fractional reserve central bank. And so people have been warning that this peg could come undone if it's fractional. Everybody can see where the liquidations level are. And selling into the market will push down the collateral, particularly the Luna token, which has, a very narrow pool of buyers and value only associated with this stablecoin, right? Bitcoin, yeah, I mean, I guess it can absorb it. It absorbed a lot of buy-in to get to where it was. They bought, I guess, 1.5 billion or something like that. So
about 2.6 billion.
That. Okay, yeah, over time, right? So it's if they sell it all at once, that won't be pretty. So we'll see how that develops.